All right, let's get started with 3 at 3. We bring you unusual option activity because that's what we do. Unusual activity, as defined by me and Pete and our team, is calls that are bought on the offer in big numbers, or puts that are bought on the offer, again, in big numbers. We don't care about things that are sold on the bid. Could be a covered right, could be, if it's a call, could be put selling as a way to buy stock or as a way just to profit from a directional trade to the upside, and selling that put to the downside. Again, doesn't really trip our trigger the same way that a big upside call buy does trip our trigger. Same thing to the downside with puts. If they're buying a lot of puts, they're thinking the market's about to do this in that stock or ETF. And if they're buying calls, just the opposite. They think it's about to go up. So with that said, let's take a look at what we've got today. KWEB is one of the big ones because this is a 3 million share trade, folks, because 30,000 option contracts, you put 2 zeros on the end of it because every option is for 100 shares. And you know what you get? 3 million share equivalent at the money, at 30, right where that ETF is trading. That's the ETF for China, of course, one of them, Chinese internet stocks, KWEB. All right, so they buy a heck of a lot of these, pay $3.45. That's $345 each call, because again, every option's for 100 shares. And then they collect $1.35 for selling the 36 calls in February. So they pick the same expiration to sell the calls as they bought the calls. And they have a $6 spread, the differential between the strike they bought and the strike they sold, $6. How much did they pay? $2.10. Again, the difference between the debit that they were charged, $345, and the $135 that they took in as a credit. So they paid basically $2, let's call it, for something that could go to $6. So $200 for something that could go to $600. In other words, they could triple their money on the trade. Like it. And we have had numerous hits in KWEB. Many of you who follow our work know that we have seen trades in here since 22 or 24, just bang, 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 bets that China reopens. Well, they bought a lot of those today. And as Captain Obvious would say, seems pretty clear that something's going on here, and that obviously more opening in China is good for these stocks, internet, as well as bricks and mortar and the rest of the Chinese economy. So that's our Captain Obvious for the day. Second trade of the day is CCL, which is Carnival Cruise Lines. I watched one of those big ships go out here from San Juan last night. Very majestic, but ton of debt. And that's not so obvious when you're watching the ship go out, but it is obvious when you're watching somebody buy 26,000 puts. Again, these are put options, not calls. Calls, I'm pulling towards me. Puts, I'm a seller of the stock at $8.50 because that's the strike that they bought. So with the stock trading $9.25, they were buying the December $8.50 puts just before Christmas. So they're thinking bookings might not be so good. Now, I never really liked betting against the cruise industry, even though they're carrying this tremendous debt. But for a trade, I like being in the 950 puts against lower strike puts against them 1-to-1. So that's the way that I'm playing it. Bear market rally or new bull run. Our webinar is tonight. It's completely free. Tuesday, December 6th, 4 p.m. Eastern Time. That's Tuesday, December 6th, today at 6 p.m. I'm sorry, at 4 p.m., December 6th at 4 p.m. Eastern. And we're going to be talking, is it a real bull run or is this just a bear market rally? You can join for free. Just register at marketrebellion.com. And we'll even send you a copy of what we talked about, the whole video. We'll compress it, send it to you, and you can watch it as many times as you like. All right, third and final trade today is Citigroup, symbol C. They're buying this Friday. This has 3 days to go, folks. So if you've never traded an option before, this might not be the time to jump in because this is deep end of the pool. These expire very fast. Time decay is of the utmost import for this trade. They're buying the 45 puts. That's just in the money. They're betting that between now and Friday, this stock goes down. Maybe a whoosh lower quickly, and maybe it's over. I'll be very quick to take profits. I'll be very quick to cut losses. You never know when you're entering the trade. Is this going to be one of those 3x, 4x trades? Or is this going to be one of those trades where we bought these puts for, say, the middle there, 65 cents, something like that, and then they just vaporize? So what I will do is if I paid 65 cents betting that this particular trader is right and they fall to 30, I'll be out. If, on the other hand, they go to the upside and it's $1.20, $1.50, $1.80, I will be taking profits quickly because that's what you have to do when you've got a short-term trade. That's going to do it for us today, folks. I appreciate all of you joining us. We appreciate everybody that has been subscribing to our YouTube channel, which is just go to YouTube, type in Market Rebellion in the search bar. There you'll see all of our videos, 3,000 plus videos, all of them free. Every single video free. So you can go back and see how accurate were John and Pete when they were saying unusual activity. This one's about to move to the upside. Nobody's perfect, but we put our butts on the line with these calls, with these puts. We don't just tell you what to do. We're, in fact, not your financial advisor. We are instead traders, and we're telling you what we're doing, and you can coattail along if that's appropriate for you. Bang! I hope you have a great day, folks. Be back with Rebel Edge tomorrow live, Monday, Tuesday, Wednesday, and Thursday. Thursday will be in Miami because we've got that 2-day live trading event. Bang! See you then.